Okay, so Circle's 2025 earnings are out, and let me tell you, the story these numbers tell, it's way bigger than anyone is talking about. We're going to dig into how they're quietly becoming the financial backbone of the internet. And it all starts with one number that, well, it just doesn't seem real.
All right, let's just put this number up on the screen. $11.9 trillion. Seriously, look at it. You'd think that's a typo, right? It's not. That's how much on-chain volume Circle handled in just the last 3 months of 2025. Not the whole year, a single quarter. It's mind-boggling.
So you have to ask yourself, how? How does a stablecoin, something that's just supposed to be a stable digital dollar, generate that kind of insane economic activity? I mean, we're talking about a velocity of money that completely shatters what we thought this whole asset class was about.
Well, here's the answer, and this is really the key to understanding everything else we're about to cover. Circle stopped being just a stablecoin company a while ago. What we're actually watching here is the birth of something much, much bigger. Think of it as the economic operating system for the internet itself.
So, let's break down the report card for the year, and you'll see why 2025 was the year they really proved they were playing a completely different game. And stellar is an understatement. I mean, look at these highlights. USDC in circulation just exploded, up 72% to over 75 billion. But what's really crucial here is their resilience. They navigated all the crazy macroeconomic shifts, interest rate changes, and they didn't just survive, they thrived. This was the year they officially graduated from a crypto service to a real global financial platform.
Okay, so how did this translate to the bottom line? This is where it gets really interesting, because when you look at their financials, you see what I call a profit duality. There are two completely different, powerful engines firing at once. So on one hand, you see the official GAAP number, a $70 million loss. And you might think, uh-oh, what's wrong? But that's just accounting noise. The real story, the number that shows the health of the actual business, is the Adjusted EBITDA, a massive $582 million profit. So what gives? That loss is basically a one-off, non-cash paper expense related to their IPO stock compensation. It's not real money going out the door.
And that's why we look at Adjusted EBITDA. It strips out all that accounting weirdness and shows you the raw cash-generating power of the company. It's the true signal. And that signal is screaming. Their ability to generate cash from operations more than doubled in 2025, a 104% increase. Just incredible.
And this chart, this is that second engine I was talking about. This is the proof that Circle is not just a one-trick pony relying on interest rates. Look at their other revenue. This is their platform stuff, their tech services. It went from 15 million to almost 110 million. That's a 622% jump. It shows the business is diversifying, it's becoming so much stronger.
So, the financials are great, but how are they pulling it off? Well, it's not by accident. They're building a monster of an ecosystem, a network that feeds itself and creates a huge barrier for any competitor. And it all comes back to this number, 72%. We saw it before, but it's worth seeing again. That's the raw fuel for this ecosystem. It's a tidal wave of new users and capital flowing into their world, and that changes everything.
And that growth isn't just for show. It translates directly into market dominance. Visa, that Visa, put out a report showing USDC now makes up almost half of all stablecoin transaction volume. Think about that. We're not just talking about how much exists, we're talking about how much is actually used. They are winning the utility war.
This is how they do it. It's a classic flywheel. First, people start using USDC for real stuff, not just crypto trading. Think payments, international transfers, you name it. That utility is what drives that insane $11.9 trillion volume. And when developers see that much activity, what do? They flock to it. They build more tools and services, which, you guessed it, creates even more utility. The wheel just spins faster and faster.
Now, one of the secret weapons powering this whole thing is something called CCTP. The simplest way to think about it is like a universal translator for money, letting USDC jump effortlessly between different blockchains. This thing is a beast. It handled over 413 times $1 trillion last quarter alone. It solves a huge headache for developers and basically locks them into using Circle's tech.
Okay, so that's the machine today, and it's already impressive. But what's the end game here? Where is this all going? Because what they built so far, it's just the launch pad. And this quote from their CEO Jeremy Allaire just hits it on the head. AI agents can't have bank accounts, but they can have blockchain wallets. Let that sink in for a second. We're heading towards a world where AI programs are making transactions. They're not going to be using traditional banks. They need internet-native money. That's the future Circle is building for. And this isn't just a dream. This is ARC. It's their own blockchain, and it's coming in 2026. The stats from the testnet are already wild. You've got over 100 global banks, tech giants, payment networks all kicking the tires. Transactions take half a second, and they've already processed over 166 million of them. This is the actual infrastructure for that economic OS they keep talking about.
All right, but let's be real. It's not all smooth sailing. To get the full picture, we have to look at the big variables on the horizon, the risks and the massive opportunities.
And the first big one is what I call the $460 million question. It's their deal with Coinbase. Now, it's a little complicated, but the short version is Circle shares about half the revenue from USDC that's held outside of Coinbase. But here's the kicker. That deal is up for renewal in 2026. Any little change to that agreement could have a huge, huge impact on their revenue. So that's definitely one to watch.
Now, on the flip side, look at how they handled the macro environment. Remember late 2025? The Fed cut interest rates 3 times. In the old days, that would have crushed Circle's profits. But here's what happened. Nothing. Their growth, both in USDC circulation and in that second engine revenue, was so strong that it just absorbed the hit. This is the proof that they are not just dependent on what the Fed does anymore. They've built a much more robust business.
So let's put it all together. You have the killer financials. You have that unstoppable ecosystem flywheel. And you have this massive vision for the future. It's pretty clear that Circle isn't just building a product. They are literally building the financial rails for an automated world, the one we're all about to live in. And that really leaves you with just one big question. In the world they're building, who can actually compete with them?